Hello everyone, Charles here, and in this presentation I'm going to talk about market commentary for the upcoming week. This week I am going to do market commentary a little bit different. Normally I do a separate post per like 1 to 3 assets at a time, but what I'm going to do today, because I might not have time to do separate videos per post, is I'd like to cover quite a few assets, all right? And then throughout the week, if I see something that has set up, or if I post it onto TradingView or anything like that, to give you a little bit more detailed information, to give you some different take profit, different zone levels, things like that, instead of just kind of covering them throughout this video. I'll do separate posts at that point, but those posts will more than likely just be a couple screenshots, and I'll bring this video into each post. Okay, so excuse me. First, we're going to start with the dollar yen. Okay. So we have had, let's see, quite a few things happening. We had a lot of movement this last week, heavy momentum, no real trend direction on the hourly chart. If we take a look over here at the 4-hour chart, we have lots of consolidation right here in between the 108.025 and 107.310 levels. Okay, you see a little breakdown here. All that is right there, just another support level. You could keep the range here, but overall, price did break up above the Hall Moving Average, and that's usually a pretty nice indication on the 4-hour chart that price may continue in a specific direction, especially when the professor lines up in accordance with that. So down here was where a long was issued if you use the professor on the 4-hour chart, and since then we've just had that consolidation period, and price came right back up above, candle bodies held above the Hall Moving Average. So my thoughts for the upcoming week, actually let me take a quick look at the daily as well. Yeah, see that same consolidation period? It's right here at the Hall Moving Average. And if we draw that in, even if you look back, excuse me, toward the beginning of April, March, even back to mid to end of February, this is definitely a range where price has experiences some consolidation, and if you break out momentum candles as well. If we go back to September and August, you can see the same thing happening in here. Okay, so this is a pretty key level to watch on the dollar yen for the daily time frame. Okay, and this pin bar right here, this is a real nice, let's see here if I can pull this. Oh, don't let me go any taller, but we have this consolidation, and then we have this real nice pin bar. So if this level holds, this 107.334, then we can expect that price will more than likely head to the upside. Okay, now if price breaks below, and I'm talking a candle body, then you can expect price to head right here at this next level, 107.019, or right around there. That's a key level looking back on these. If it breaks below that, should be somewhere right around the 106.640 level, and then to the top of our demand zone at the 106.3-ish level. Okay, so that is if it breaks below. Now if it starts heading to the upside, there we go, then here are some real nice key levels to watch out for. Okay, so we'll see what happens, but like I said, the daily and the 4-hour are lining up. They're both showing you that clear consolidation point. Now if we switch to the hourly, here's that consolidation as well. Nothing real clear though on the, as far as the hourly is concerned right now, because we had that heavy spike to the downside and up. So that's not showing a whole lot to go by, but what I will say is we do have a new defined range, and that range, the upper portion of that you could put here at the 107.895 level, or at the top of the supply zone, which is where these candle wicks hit. Okay, so that is safer to go up there, especially on the hourly. That's what I would personally recommend. But I am a longer term trader. I do not trade anything really under the 4-hour chart. I'll use the hourly for entries as long as it matches up with my 4-hour and daily, but as far as like anything under the hourly, 5-minute, 15-minute, any of that, I don't even look at, because I just like to check in, you know, a few times a week and manage my trades, you know, trail stop. So the key level I'd be looking at here is this one, the 107.941. Okay, and this new defined range, I know we have this spike down here. Okay, this was more than likely due to news, and you can see that price struggled at a few levels. Okay, so this being one of them, 107.740, and then this being the other, 107.575. Okay, so excuse me, if price holds at this level here, the 107.740, then what we're going to watch for is a break above the, like I said, you could go by either one of these levels. I would go personally by the 107.941. Okay, just because of those candle wicks. Okay, and just looking back on the chart. So again, that's up to you. You could go by that lower 107.895, or better yet, honestly, if it breaks above the 107.895, watch for a candle body to hold above that. If it holds above that, then I'd say that's a pretty valid break at that point. But if you just see wicks, okay, and it's not that actual candle body, and I'm not talking about just a little teeny tiny bit of one, okay, I'm talking, let's see an actual candle body go above, close it, okay, otherwise just go by this upper level. It's safer. It's not like a daily chart where this is, you know, 50 to 100 pips. This is only it's five-ish pips. Okay, like it's not that much. Okay, so just be smart with it. Okay, be careful, protect your profits. That'd be my thought. Now, if it breaks above, then targets, I would honestly just say right up there, 108.084. That'd be your first target. You may see some resistance right around here at the 108.004. Okay, but that's what I'd be looking at. Now, if it breaks below this 107.740, then we can expect that price will then go down to 107.665. If it continues, then 107.575. Okay, these are all some real nice key levels to go by. All right. 4 hour. I would say that the 108.025 up to 108.084, that's the upper portion of the new defined range, and the lower would be 107.202. Okay. And I would base your targets, this is real clean here. Load up your professor, go by these levels right here with supply and demand, and trail roughly every 25 to 50 pips. But these are all definitely key levels. There's really no point in me drawing them in because I'm going to draw them right where they're already at. Okay, so check your supply and demand indicator, and that's really going to give you all of those key levels. But this is definitely our new defined range. So that is dollar yen. Let's take a look here at, let's see. Oh, actually, I did send out a market commentary last week for the New Zealand dollar. Yeah, on the 28th. I think the hourly already hit its take profits. I think the 4 hour hasn't even broke range level yet. Yeah, so hourly, we've already hit our take profits at this point if you are the shorter term trader. Okay, so 4 hour, I was gonna say I'm not in this, so I'm sure the 4 hour hasn't really done anything. Yeah, see, all we had was a break here to the upside, but no candle body, just the wick. So currently that is just in a range. If we take a look at the daily overall is in a long trend. We'll see, as long as we don't break the previous low, which is like 0.60934, then we should continue to see a long trend. But let's see, let's take a look at the 4 hour. So 4 hour, we've got a leg, 2 legs. So we could still definitely see that third leg up or further. I'd say on the 4 hour, if that's what you're going by, look at this zone here, the 0.61480 to 0.61714, and if price holds above this level, then we are still good with longs. If it breaks it, then that would be invalidation at that point, and we'd be looking for a new defined range. If it breaks below and candle body holds, then we could expect price to head here, so 0.61216 down to 0.61036. Okay, if it breaks above, then or continues, I guess, excuse me, to the upside, then this is a key level right here, 0.62388. Okay, should head up there. If it breaks above that, candle body holds, then I would trail roughly every 25 pips all the way up to the lower portion of our zone there, 0.63096. Okay, so that's just my thought on New Zealand dollar, euro pound. This is the 4 hour chart. This is definitely in a real nice long trend. If you trade the professor on this asset with the 4 hour, we had a real nice long entry here. It followed to suit perfectly. Here was where it was, trade was initiated. There we go. Followed to suit. We had our initial correction, a little bit of consolidation, a few days here, okay, and then excuse me, continued up, kept trying to break. That's what these wicks are here. This is a real nice, actually, double. It's kind of a triple bottom, doesn't come quite down, but anyway, here's where we had our momentum candle right there. That one right there. And then we continued up, correction. So this is our first leg. And you could call this a second leg. This is more of a consolidation point in my mind. I would personally call this leg 1, leg 2, 3, deeper correction, and continuation. Okay, so at this point, price has come down to a key level. We have created that correction down fully. All right, so we'll see what the market delivers when it opens, but this could give you the opportunity to enter with minimal to no risk. You'd want to definitely set a stop right around in this area of the 0.89654. Okay, but if it breaks below and candle body holds below that level, then I would be looking for price to head down to 0.89402, 0.89259, and then all the way down to our demand zone 0.88979 down to 0.88801. Okay, if we continue to the upside, then we could expect price. Let's look at some key levels here. We could expect it to head to the 0.90297. 0.90606, 0.90989. Those are all some real nice key levels. Okay, so there's some thoughts. Overall, we're in a long trend, but we'll see what happens. Okay. Pound CAD. Anything happening? This is kind of nice. So price did break above the Hall moving average. Candle body held. Momentum candle to the upside. We may be looking at a nice long following a short trend. This is the 4 hour. Let's take a look at the 1 hour. 1 hour not showing us a whole lot. About the daily candle. Daily is overall in a downtrend. We had a break of our previous defined range here. Okay. Here's where we experienced resistance. It was trying to break it. Bam. Here is our momentum candle to the downside. Here's our next consolidation point, and bam, broke back down. So overall on the daily, it's in a short, okay? But we are seeing price trying to head back up. I'd be real careful with this one if you trade it till we have a real nice clear entry. Well, this is the daily. What kind of range are we looking at here? All right, so this is over a 200 pip range, so that's nice. I would say I'd watch this on the daily time frame and see if price breaks back into this range pretty nice key level there too. I'd see if it breaks back into this range, and if it breaks above the 1.70895 level, not candle wicks, talking about the candle bodies, then I would say a long would be in order at that point, up to the 1.72355. Okay. So that's my thought on that. If it continues to the downside, though, like if it doesn't break up here, then we could expect price to head back down to 1.68526. 1.67796. 1.67011. Okay, those are all definitely some real nice clear levels. So we'll see what the market delivers. Pound yen. Pound yen. On the daily, it has broke above full candle body the Hall moving average. Okay. Price definitely kind of came into a triangle trend here. Okay, so we will see what happens and if price continues up. It's a good indication to go long. If we take a look at the 4 hour, we got going on here. Oh, it's trying to break. Not super clear. It's definitely fighting this level right here. And you can see it has previously as well. But when it does, you get some nice momentum candles. Okay. So we'll see. That is 133.183. So that's your key level right there to watch out for. If it breaks above, candle body holds, then we can look to head up to 133.386. 133.660, 133.897, and then if it breaks below, let's see, where's the most consolidation here? I'd say it's right here. If it breaks below the 132.518 and candle body holds, then we could see a new defined range or potential continuation of the short that was in store before. This could have just been a deeper correction, but I think it might actually be turning around. So if it breaks below that 132.518, we could expect it to go to 132.302, 132.053, 131.803, and just again trail your stops, protect your profits. But that's what we're looking at on a 4 hour. CAD yen, same kind of setup there as pound yen. So the yen pairs are definitely making a move up. You can see here price has been down in this range for a while. All right, that was a little motorcycle going by there. Sorry about that. I bring this right up to the wick though, because you can see back here where the wick came down. It actually, oh, I would bring it right here. Yeah, and these wicks match right up too. So 78.518 is a key level for the CAD yen. If price breaks up above that, then we should see some real nice movement to the upside. Actually, this is the daily chart. Let's not be too crazy. I would bring it here. 78.927 as a first take profit. 79.294 is a second. 79.724 is a third. And continue to trail, because it could very well go all the way back up there. We'll see what happens. This was an effect of COVID-19, so price could be heading right back to where it was previously, but we'll see. If it does, that'd be a great potential. Even if you waited for it to fully break and didn't enter till the 78.895, you'd still be looking at the potential to really gain a lot. This range right here, back to where we were previously to COVID, that's almost 600 pips. If you bring it up to the wicks, it's above 600 pips. But this is a beautiful, beautiful move. So we have a lot of potential there if it breaks up above that. Now, if price breaks below the previous low, it's a pretty large range though. Let me see. I could bring this a little bit tighter. It's not too bad. 165. I think where we're at currently, I would actually bring up this range to here, 77.415. So if price breaks below that, again, candle body, not wicks, then we can expect price to head down to 77.026, 76.583, 76.243. And that's a pretty good, pretty nice setup there. So we'll see. We'll see what happens. Overall, we are technically in a long trend on the daily. So keep that in mind. But that is the plan right now. Aussie dollar. Aussie dollar's in a real nice long trend. It came all the way back up to where it was previously to COVID. So that was real nice. That was one that we called in the room. I think it was last week or the week before, and it has it's delivered. It has definitely delivered. So we'll see at this point. I think we'll probably experience a deeper correction at this point, especially because price has come back up. But we'll see. If price breaks below the previous low, okay. Whoops, did not mean to grab that one. The 0.65231, then we could see more of a deeper correction down to 0.64672. If price, excuse me, and then even down to 0.64133. But if price breaks below this 0.63754, then we'll be in a sideways motion, more than likely, or a consolidation period, instead of an actual correction. Not that a deeper correction couldn't come down there, but I would expect a deeper correction to come to here, here, or here. If we break below this, then we may see continuation of a short trend at that point. And previously to COVID, we did start. We had broke the low and entered a short trend. Okay, so we'll see what happens. Now if 0.66838 doesn't hold, let's say price breaks up, then we can expect that it will head to 0.67308, 0.67740, Again, continue to trail up at that point if it continues, 0.68246. Okay, it could continue all the way up to here or beyond. We don't know. Again, we'll see what the market delivers. Dollar franc. Dollar franc, we're experiencing some resistance here. Okay, price wants to push below this level, but it hasn't yet. We had a momentum candle that did. I think that might have been due to news, but we immediately came right back up the next hour after. Oh, and this is the hourly chart. Okay, please keep that in mind. So we will see what happens. Overall, we are in a short trend on the hourly. If we go to the 4-hour, we are in a short trend, creating lower highs and lower lows. Okay. But we have come down to a demand zone, and we'll see what happens. If I would actually say if this level holds, the lower portion of the zone, the 0.95880, then we'll be in a new defined range. If price breaks up, this isn't real clear. Price is definitely kind of fighting back and forth. If price breaks up above the 0.96313, then we could see it head to 0.96428, 0.96544, 0.96650. And if this level does not hold and price breaks below it, then we could easily see it head down to 0.95700, 0.95531, 0.95380. Okay, those are some key levels definitely on that 4-hour chart. Again, we'll see what the market delivers when it opens, and go from there. Okay, euro dollar. So if you're new to trading, or if you just have never heard this yet, there are some pairs that are mirrored pairs, and the most accurate being the dollar franc versus the euro dollar. Okay, so usually when price is heading up on the dollar franc, price will be heading down on the euro dollar, and vice versa. So if we take a look at the euro dollar, not an exact mirror, it's definitely trending better and cleaner. Okay, but same thing, we've been heading in a downtrend since you could count back to here, but I would say right here is really where that started. So beginning of May, and here we go. We had a double bottom on the euro dollar, and we headed up. So that all happened beginning of May as well. Beginning mid. Okay, because it took a bit for that double bottom pattern to form and have the clear break, and that clear break happened right there. So once we did, then we had our correction, and then we had continuation. So we're in the second, actually we're in the first, second, third leg right now, the lower portion of the third leg. So if this previous low holds, then we should be good with long entries, okay? If if it doesn't hold, okay, if price breaks below, and you could even bring this 1.10726 down a little further to the bottom of those wicks, just for a little bit safer entry, 1.10665, okay? It's up to you, depending on the type of trader you are. If it breaks below and candle body holds below, then we can expect price to head to the downside with a take profit 1 of being 1.10419. Take profit 2 of 1.10222. Take profit 3 of 1.10024. Okay, now if price continues to the upside, then I'd say upper portion of the zone 1.11462, 1.11754. Let's go back on the chart. That's definitely the next take profit right there. 1.12114. 1.12413. All right, those are all nice potentials for that. So that is my thought on the euro dollar. Pound dollar. So this is the 1 hour chart. We are in an overall long trend, definitely experiencing some resistance here. Specifically at the 1.23628 level. Okay, so we may be creating a new defined range where you see price kind of head in a sideways motion, but we will see. If we switch over to the 4 hour chart, price did break above the whole moving average here. We had a heavy momentum candle right back down to that break, and then started heading up. But we haven't created new highs. We aren't creating higher lows. I mean, we were from this point, okay? Here was the first higher high, okay, and the break, and a higher low, a higher high yet, higher low. But right here, this is where we're definitely experiencing some resistance in the market. So it would probably be better. I mean, overall, if you're going to stick with the trend, stick long, okay? And at this point, this is pretty solid entry with minimal risk. Excuse me, with a stop loss being, I'd say a stop loss range, actually, not even just a stop loss. Of being like 1.22971 down to the 1.22676. Okay, if price breaks below that, then I would expect price to kind of head back down to 1.22038. Okay, so we'll see how that plays out. But overall, we have started a long trend on the 4 hour. If we take a look at the daily, so the daily was still in this triangle trend here. We've had some sideways movement. There's no clear trend direction, okay? My thought would be to trade this like a range. This is a pretty decent sized range. Yeah, it's almost a 300 pip range, okay? So you don't want to be careful with that. if you are a shorter term trader. If you're longer term, should look real nice to you. But if we pull this in a little bit tighter, 140 pip range. Okay, so that's a little bit better as far as like trading throughout the week at this point. What I would say is if price breaks the 1.24033 level and candle body holds, then we'll head up to the 1.24648 level, and then the 1.25209, 1.25824, 1.26493. If it breaks above that, then we're definitely in a real nice long trend, and we could probably head right back up to here. If price breaks below the 1.22602 level, then I would expect that it would head down to 1.21706. 1.21131, 1.20530, and if it breaks below that, then we could see it heading further. Trail your steps if you get into that. But I mean, this is real nice. I kind of like setups like this sometimes because you can gain from both sides. 600 pip range. So that's pretty nice looking setup overall. Okay, but those are definitely your key levels. Upper side being 1.24033 and lower side being 1.22602. So that is what is on my radar. There's a lot there, obviously, but you can always refer back to this video. If I have time to make shorter videos with separate posts, then I will, but I really wanted to get quite a few assets out there for you guys and give you a lot of potential trade setups. So I will send out separate posts throughout the week under the market commentary section. But like I said, it'll probably just be screenshots with some key levels. So you guys have a good one, and I will see you in the room. Okay? Have a great week out there.